Hello and welcome to Connect, the podcast of California MBA, where strategy, innovation, and leadership come together to shape the future of mortgage finance. This is where voices and ideas driving industry forward meet real world execution. My name is Paul Gigliotti, CEO of the California MBA. And if you're here, you care about building better for your business, your clients, and the future of housing. Before we begin, I want to take a moment to thank our 2026 President Council sponsor. Their support make these conversations and all the advocacy and legislative work we do possible. So huge shout out to AmeriHome, Consolidated Analytics, Loan DNA, Funding Shield, CMG, Guild Mortgage, Rocket Mortgage, Wiener Brodsky Kidder, and Western Alliance Bank. Again, thank you for everything you do at the California MBA and for our industry. Today, I am very pleased to welcome Devin, Head of Mortgage and Capital Markets at FICO. FICO has been central to the credit ecosystem for multiple decades. And right now, the conversation around credit scoring is moving quickly, and it's a real conversation. Between score modernization, FICO 10T, borrower access, investor confidence, pricing, model valuation, and secondary market execution. This is one of the most important conversations happening in mortgage today. And I'll let you in. Devin will also be at our Western Secondary Conference, front and center on stage, talking about all these good topics. Again, Devin, thank you so much for being on Connect.
Paul, thank you for having me. Really excited to be here today.
Absolutely. We've got a lot of stuff to dive into. I've got a stack of note cards. We've been collaborating on different ideas to bring to the table. So, are you ready to dive in, my friend?
Yeah, absolutely. Been looking forward to it and just excited to talk all things FICO.
All right, sounds good. So, let's start with the big picture and then we can go granular. Credit scoring is getting more and more attention right now than it has in years. And I think a lot of that has to do with who the consumer is, how the consumer is changing. And then we're obviously looking at innovating almost every nook and cranny with the big AI word, right? So we're seeing conversations around model modernization, lender choice, borrower access, pricing, secondary market confidence, and how the industry should think about risk in a changing market. That's a big mouthful. But what I'm curious about from you, Devin, is from FICO's perspective, how would you describe the credit scoring conversation today and what's changed about it?
Yeah, absolutely, Paul. I think you hit the nail on the head there. Credit's a big, it's a short word, but it's a big industry. And I think from our standpoint, FICO's just really excited that we're seeing steps to actually implement and modernize credit being taken not only by the GSEs but by other governing bodies and other investors. First, I want to start off by applauding Fannie Mae and Freddie Mac for releasing more than a decade of loan level historical 10T data, which will help the industry evaluate and adopt FICO's most predictive score. This is something that's been long coming that the industry has been asking for. And so we're just really excited because it'll allow the industry to actually take that next step to adopting FICO score 10T. FICO is used by 90% of top US lenders, and it remains the standard for consumer risk. And so we're really excited that our most modern and most predictive score will be the score that mortgage lenders and investors begin to look at and eventually start leveraging over the next few years.
That's a huge step. I know I've been in the industry for a hot second, and it's been something coming for the past couple of years. So, thank you for dropping that. And there'll be more about that in our conversation. For now, what do you think the mortgage industry needs to better understand about where credit score is heading? So let's dive in. A lot of people want to have this strong understanding, whether it's a lender or a solution provider.
Yeah, no, absolutely. I think that's a great question. I want to take a step back because I want to speak to my personal experience. I come from the mortgage and capital market side of retail lending. So my
Okay.
experience was always with hedging, pricing, trading, execution, and FICO is a big part of that, right? Every bid list that I ever put out had a FICO weighted average FICO score. Every list that an investor looks at has it, and for me, it was really funny because when I started FICO, obviously I knew what FICO score was, and I knew, how investors use it and how it plays into risk-based pricing. But what I really didn't understand was the full breadth of what it takes to obtain credit for an originator, and what that comes with, whether it's dealing with getting the scores in your LOS, getting them in your PPEs, or just having your tri-merge reseller be able to deliver it in a manner that is feasible for an originator. And so I had a lot to learn there, and now I can confidently say I understand that space very, very well.
Yeah.
And I think what's really good about it is it has allowed me to understand where we need to fill in those gaps to help the industry understand what we're doing, right? The industry is looking to modernize and take advantage of the best tools on the market. And
Right.
FICO 10T represents the next generation of mortgage risk assessment, right? Offering superior predictive power and stability. So, from a FICO standpoint, we really do support competition, and we really want the best product to be used for mortgage originations because it is the largest asset, right? And so, from our standpoint, we really try to make sure that we aren't saying that, hey, you should only look at credit in one way. You should look at it the entire scope, right? The entire scope of from time of origination through capital markets investment. And so
Mm.
it's not as simple as just saying, hey, we're going to use this score now and move forward. No, it's all about the data, right? Let the data tell the story and let folks make a decision based on that data. And so we're just really excited that we're able to 10T will help expand access to credit and help get more borrowers and homes. I think that's the main goal of our industry as a whole, is to help more people get into homes, and we're very confident that FICO 10T is going to do that.
Yeah, it's really interesting. As you're talking, Devin, we're talking about the when we first jumped in, we talked about the consumer is changing, and that's been a thread in my conversations almost throughout every Connect podcast throughout the year, whether it's customer acquisition or consumer acquisition, ability to pay, access to credit, affordable housing, whatever the conversation is, the consumer has changed drastically. Look at non QM, it's taking off because the consumer has changed. A consumer now can most likely really can't survive on just a W-2 job. They need a side hustle, right? And when you look at what's happening in other countries, look at in Europe, 38% of the executives are fractional executives with 3 or more jobs. In the United States, now I think it was 25% of homeowners have a side hustle that comprises of up to 20% of their monthly income. Now, FICO doesn't necessarily, get involved in income and the way income is driven, but I throw those stats out to share how much the consumer has changed. And I think what's going on with credit scoring model and maybe analysis is it's now modernizing and catching up to who is that consumer and it's no longer Juna and Ward Cleaver, it's a different consumer. And so I believe 10T is grabbing that and understanding the new consumer and modernizing it. For lenders and originators and capital market professionals who may not live in the credit model world every day, what makes FICO score 10T different from prior models? Please get as detailed as you want. I don't think the entire industry knows what 10T is about, so enlighten us, Devin.
Oh, absolutely, absolutely. I love that it's 10T because we get a lot of T10s, and it always makes me chuckle.
I like
Uh,
10T rings with me. Good marketing. I like it.
but I think you're spot on in terms of consumer changing, right? Where we are today is much different than where we are when these traditional credit scores were beginning to be put into implementation. And so, I always speak to the fact that I am beholden to my points. I am an American Airlines slave of points, if you want to call it that, because I make decisions in terms of where I will fly, based on my points, and I try to leverage those points as much as I can. And I know that that holds true for a lot of different folks. And so with that, a big part of credit is utilization. And so understanding how someone can actually utilize credit, and how they can do it in the right way, and how that actually helps them, when we're leveraging that data to calculate that score. You made a really good point around the type of consumer changing, right? We have new professions like influencers, and you've got folks who are who are doing all types of new jobs, working in social media, working in digital marketing, and all these different things that really we haven't seen traditionally with W2s. And to your point, where non-QM is seeing an uptick because a lot of these folks who may have been missed by the traditional lending styles are now have an opportunity to get loans within the non-QM space. And so FICO's 10T specifically, we're very proud because it is our most inclusive and predictive score ever. And it includes both trended and rental data. So that's one of the big keys, right? What everyone asks me, what does that T stand for? The T stands for trended data. 10T was introduced in 2020. And while it is our most predictive scoring model to date, our previous models we still feel very confident in, but we know 10T is that new shiny object. Um, it integrates trended data, like I mentioned, and reflecting FICO's practice of continual innovation to address market and data advancements. Right, so we're taking all those additional data points that we get from trended data and baking that into your score. I always like to say 10T is more of a video, whereas Classic is more of a picture. And for anyone that's worked in lending, you understand the challenge of a borrower coming in and getting credit. Right, a lot of times a borrower will come in and say, I want to get a loan. And one of the things is first questions you ask is, how's your credit? They may say, oh, it's not great. And so then you begin the coaching of, hey, all right, let's pay your lines down. Let's get your utilization really low. Let's make sure everything is clean there. And the borrower will do that. And then after they get their loan, well, a lot of times they'll go back and start making big purchases, right? I know a lot of loan officers who always tell folks, do not go and buy furniture or buy a refrigerator or buy a car while you're going through that process.
Right.
But we know that a lot of times after the loan is originated, they will go and do that. And so what's really cool about 10T is we're able to look at 24-month history and say, okay, yes, while their utilization may be low this month, we see over the past 24 months that they traditionally have higher utilization. And so that allows the person making the credit decision to have a better view into that borrower's credit. And it's the same on the flip, right? If you pull a score mid-month and you might say, oh wow, Devin's got 15,000 or 20,000 worth of credit card debt. Well, if I look back over 24 months, Devin historically pays that balance off on a monthly basis. And someone like that, you should say, okay, they actually are figuring out how to utilize credit and do it in the right way. And 10T is able to capture that and help them actually get into a higher score and into a home. The inclusion of rental data, right? While it's
That's
still
where I was gonna go, like, how that was just about to come out of my mouth, Devin. Let's talk about all the data that maybe isn't on your credit reporting, right? So it's not like a liability where you go out and get credit, but rent, cell phone, utilities, those are also things that need to be paid on a monthly basis. And maybe for an individual that never got off on the right foot with credit. And so their credit score is, you know, in the low 600s because they've just never had credit cards or car loans. They're a little bit more conservative, let's say, with their spending. Does 10T wrap in any of that other, those liabilities that are paid on time on a monthly basis?
Yeah, absolutely. It's funny. We always hear of, our competitors speaking about the inclusion of rental data, but the reality is, rental data is still sparsely reported by the credit bureau. So while it has
Yeah.
potential to expand access, its impact depends on how consistently that data is actually furnished. Right.
Yeah.
Recent estimates indicate only 3.5 million of 77 million renters have data furnished to the credit reporting agencies. And so while it is, when it is there, we will pick it up, we will include it in your score, and we will make sure that it's a data point that is leveraged. But what's really cool about 10T is that it's built on the same blueprint as that classic FICO score that the industry has grown to trust. And really, it's just an improvement of that. So some of the things we think about when we're saying what are the difference between our classic and where 10T improves is, our treatment of authorized users, right? I think a lot of folks have said, oh, one example is let me help my kids with their credit card and put them as an authorized user on my card. Well, FICO 10T is better able to segment those authorized users, right? Someone who is just on their mom or dad's credit card should not get the same benefit as someone who has been paying credit and making payments on that credit card for years and years. So that's one of the really cool improvements of the score. Also looking at medical collections,
Oh,
ignoring medical collections below $500. That's a big one as well. The improved treatment of medical collections and understanding how to use that as a predictor of the ability to repay rather than just having it as a static data point. That's huge. And so these advancements for 10T are really great because it's capturing a lot of the advancements that we've put in our other score models, whether it's version 8, 9, or 10. And it's really kind of encompassing all of that and putting all the good stuff into our latest and most predictive model.
yeah, that's impressive. And so this is rolling out now, as you were saying, the GSEs are picking up on this, Fannie and Freddie, and so your 10T scoring model is here and live when the FICO score is available via credit report.
Yeah, yeah, absolutely. So we have our FICO 10T for free program. Got to give kudos to our marketing team for coming up with such a catchy title. But yeah,
T
we've
for
actually been running this program for just under 3 years. And so what that program
nice.
allows lenders to do, we've got over 70 lenders who are in the program today. And what it allows them to do is get FICO 10T for free alongside the classic score when they are purchasing credit. And so a lot of times we get the question of, okay, what can I do with 10T right now? And the truthful answer is, while we're waiting on the GSEs, there's still a lot of other production that is non-GSE production, whether that be
That's right.
VA, whether that be non-QM, whether
That's
that
right.
be jumbo production that's out there where we really feel that having an additional credit data point will allow lenders and investors to have a better insight into credit. And so where we're seeing some adoption has been within the VA space. Lenders really be having the ability to go and say, "Hey, can we help a veteran with the terms on their loan by leveraging an additional data point?" And I want to be very clear that VA technically does not require a credit score, right? And so while all lenders still pull it, they do have the ability to accept other versions and other models. And so that's one way that we've asked guys to start looking at it. Servicing, right, Paul? You've seen over the last couple of years some of the biggest moves that have been made in the industry have been around purchasing of servicing, bulk MSR acquisitions, or just mergers with servicers and origination arms. And so one of the ways we've started to engage with the mortgage industry is to say, hey, if you have the ability to have a classic FICO score and a 10T score, how can you sharpen your pencil on your MSR grid, right? Every
Yeah,
MSR grid I've ever seen has a FICO adjuster. And having the ability to add an additional adjuster for 10T really could give you an opportunity to say, hey, maybe I can add 1 or 2 basis points to my price that would help me win a loan that I may not have gotten in the past. So our team is really focused on getting the data into the hands of the mortgage community and letting them make the decisions, right? We have a lot of smart people who are looking for ways to help more borrowers, and 10T is just an additional tool that we feel will help more borrowers get into homes.
absolutely. Well, not foremost, but first, brilliant 10T for free. I hope to see some T-shirts at the next conference participation because that's fabulous.
We're on
Second,
it.
I wanted to touch on the secondary market because that's your wheelhouse, right? And that's where
Mhm.
you spent some of your time when we first came on, as in the retail world. And I wanted to ask, and you brilliantly led into it. How important is secondary market confidence when we talk about the credit score modernization? A lot of folks might not, a lot of consumers might not understand that there's a price that you get when you're, originating the loan and you close it, but then what happens to it after, right? And so the importance of being able to carry that data forward with 10T and have that credit score adjusted to match the modernization of what the consumer needs is not just upfront, but also back end for balance sheet efforts. Is that correct?
Oh, 100%.
Yeah.
Mortgage is unique. Decisions made at origination ultimately flow through the secondary market, right? Investors rely on consistent, stable risk signals and score distribution, established performance history, right? Have they seen a scoring model go through an entire life cycle? And so the entire ecosystem relies on something that is the common language, which the
Yeah.
FICO score is.
Yeah.
And so to your point, every, decision that is made starts with pricing or capital markets.
Right.
For most of my career, every morning I had to set rate sheets and make sure pricing was going. And quite frankly, the loan officers couldn't do their jobs until they had pricing, right? So it all starts with execution. And that execution flows down to, Fannie Mae and Freddie Mac. It
Right.
flows down to your broker dealers and CMO desks, and then ultimately to the end investor. And that end investor is the one who has the appetite, whether it's a insurance, a pension fund, all these guys who are buying mortgages for long-term assets. That's where it kind of all ends up. And so those guys need to have confidence in what they're getting from the originators all the way through the broker dealers and back and onto their sheets, that
Hmm.
they are getting the most predictive and most inclusive score. And
Right.
that is where we see that there needs to be a lot more attention. I think, quite frankly, investors have only known our classic FICO score for decades, and so they feel very comfortable with it. And so my team is really focused on making sure that we can educate them on the benefits of 10T. And so far, the feedback we've gotten is that they're really excited about it. The FICO score is used for prepayment predictions, and so they think that the way that 10T is modeled and the way that we're able to better identify risk will help with that prepayment prediction modeling down the road. And in turn, that will lead to better execution, right? We
Yeah.
definitely feel that there's an opportunity to leverage 10T, whether it be through FICO spec stories or whether it be through just pure execution decisions of retaining or releasing your servicing. There's a lot of places where our score can help benefit an originator and the investor community. And so we're really focused on spreading that message.
Yeah, it's brilliant. And I'm loving this conversation. We're over time, but I gotta ask one more question.
Mhm.
And it's something that I've been thinking about as I was leading up to this conversation, kind of around policy regulation and responsible modernization. And so, as you know, one thing the California MBA has been focused on is making sure policymakers understand the complexity or how complex lending already is, right? Like, let's not overregulate, especially as we're seeing the CFPB disseminate or the lack of CFPB throughout the states. The federal government is kind of easing in and saying, how much do we do? And now we have not discord, but we've got states, moving forward, creating additional policies that are layered because there's already federal policy, right? And so we're seeing a lot of movement within the states individually on regulation. With that, we all want responsible innovation and fair access, and obviously strong consumer protection. But as I was saying, mortgage is already heavily regulated. What do policymakers need to, just in a couple of lines, what do you think policymakers need to understand about credit scoring, um, model governance, and modernization before creating any new requirements? Like if you were to sit in front of a legislator, what would be two lines that you would give them to understand where you are now as an organization and where you need to be to support the consumer?
Yeah, no, I think the path forward requires a careful balance, right? Embracing innovation while ensuring fair competition and maintaining the stability and trust that underpins the entire housing finance system. To maximize the benefits of new innovations and scoring models and reduce implementation costs, FICO 10T and Vantage Score should be implemented at the same time because as a lender, everyone is focused on, ABC, always be closing, right?
Yeah.
And if you're having to worry about, implementing one model and then implementing another model, that takes time away from actual production. And so what we recommend is having the entire mortgage industry migrate on this credit modernization at the same time, because that will only help lenders and help the operational burden that they have to face, because this is a new challenge. It's never been done before. And so
So,
I think we have to really move forward, and policymakers have to really think about how can they help the industry by being consistent and making sure that they are doing the right things to put in place so that a lender and the entire ecosystem can move forward in the same direction. Because otherwise, chaos will ensue. And while chaos may create opportunity, in mortgage, we all know chaos is not the best thing.
yeah, well, exactly. And so I think what I heard from you is it's up to associations like the California MBA, the National MBA, to educate policymakers on what is needed. And it sounds like what you're looking for at FICO is a universal understanding, so that the model goes back to being used like nationwide. Regulation is the same throughout. Um, and it's modernizing to meet the need of the consumer. So I'm thrilled that FICO is such a strong participant with the California MBA, and that we can lean on you for guidance and support as we're going to assembly members and legislators with all the new bills that are going to come up very soon. So keep your ears open and keep looking at your email, because we'll be reaching out for more suggestions. I really appreciate your time today, Devin. I know you're busy, obviously not riding your skateboard as it's on the wall, but doing a lot of great things to help modernize access to credit. That's a big thing that we're all looking at. This conversation is a good reminder that credit scoring is not just a back end technical issue. It affects borrower access, lender execution. It affects pricing, as you were talking about. Obviously, secondary marketing, as we were just talking about, portfolio performance, what the GSEs are doing, and it affects the future of mortgage financing and how the consumer behaves. It's a big topic. As the industry continues to modernize, it's critical that we have thoughtful conversations about innovation, risk differentiation, transparency, safety, and soundness, and of course, regulation. So, thank you again for being on Connect, Devin. Until next time, stay engaged, stay sharp, and keep building with purpose. Thanks so much.